The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, the Friday edition, 11th of April. And happy birthday to my two young cousins out there in South Africa, twins, turning 23. It's amazing. All right. So the story is we had a very the futures were down huge earlier on, and it looked very, very ugly. I'd say to my subscribers to my opening call that I'm expecting that the IBB and probably the NASDAQ and the IWM are real close within a couple of days of having a good counter-trend rally. My suspicion would be that if today is just a kind of a test of support, then we might see some kind of a rotation into maybe Monday afternoon or Tuesday. Maybe say what would be perfect is that if today we give back some of the gains that we've made. Now the Dow's only down 42 at 16,127. S&P's down 2 at 1830. Comp index is down about a point. Wait, is that correct? Yeah, at 40.53. Gold is -3 at 1317, holding quite well. Leg C, silver is down 9 cents at 20. You've got a copper at 304. Hey, this is a pretty good action for copper, I must say. Under these circumstances, bonds are just up 330 seconds at 134, 1730 seconds. Dollar, in fact, is just a fraction higher, up 8 cents at 79.53, and the euro is up also a fraction. So this is going to be a very interesting session. Candle forming, I suspect, well, we don't know. But the flatness of the stochastic says that rallies are still at this particular point tentative. They're emotional. People saying we're overbought, we need to bounce, oversold, we need to bounce, etc. More importantly, the 9-period exponential moving average on the E-mini that you can see here, this is the right side, is the 120-minute chart, went to 1812.75. That is a whopping pullback from the 1867.50 hit twice just recently in 1892, just a week from Friday, a week from today, right now. 1892.50 was the high. We're now at 1812. That's huge. That's one of the biggest declines we've had in quite a while. So what I'm expecting is that I would love to see, so love and expecting and reality are diverse opinions. But on a purely technical basis, the E-mini went from the low today right to the 9-period exponential moving average at 1827. That 1827 high, well, actually 1832, was the high earlier on this morning, but the balance has gone right to that 1827 level. So I'm anticipating that this candle is setting up a kind of a rectangle formation, at least for the for the trading into Sunday night, and that we're going to be watching to see a break above it. Says that you've still got the long wick on the downside, you have a long wick on the upside, and that's got the rectangle pattern. I'm suspecting that there'll be one disappointment, something like that, coming up, and that will take us to a low Monday morning-ish into Monday afternoon or Tuesday morning. My preference would be to extend it to Tuesday and have it really disappointing, and Tuesday could be the kind of reversal pattern that we see that has legs in terms of time after the initial thrust to the upside, but not all that much in points, but on percentage terms, it'll be quite a nice bounce. And that bounce could last between 5 to 7 sessions, maybe a little more. I'm not sure. It depends on how we do it. If we rally right now, we're usurping that energy, the downside energy, but at the same time you're usurping upside energy. And that actually is, it's more of a negative to have a rally now rather than to have what I said to subscribers to open the call. I said, I'm anticipating a low, not the low, but it's a low. It's a tradable bounce, but then you've got to be careful. So that's the story. Day's young, anything can happen. As I say, if the low that was made this morning internally based on the 120-minute chart, and based on my smaller time frames that I can show here, is holding very well. The MACD is good. The stochastic's improving in the 5-minute chart. Says we could test 1827. If we break above it in this move, that's actually in the 5-minute chart, leg B, and then you should see a CND, and that could take you to the 2932. That's the 1829 to the 1832-ish area. So those are the parameters that I'm looking at right now. Just been a nice little trading vehicle intra-morning. Let's see what happens from here. Now, I wanted to do a couple of things. I had a couple of emails. Good morning, Basil. I'm trying to buy a basket of these into the Abyss for a pop-up. Please, could you discuss on your show which ones? Actually, they're great. This is exactly the time that I wanted to look at these stocks. Over the weekend, I'll do it right now. FEYE. I always forget what it's called, but I always remember the symbol. Oops, yep, there it is. FEYE is, in fact, Fire Eye Inc., trading at 49.21, just made tested and went under the left side low bar, acting quite nicely. Divergence between the stochastic rising and the MACD making an M formation. The attempt at a turn, but just an attempt. In the weekly chart, that is a whopping pullback. I mean, when I say whopping pullback, this is an IPO that came out recently in the 40 area. It went all the way to a high of 97.35. It's pulled back a little bit. I'd say 97.35 to 47.51 is a pretty darn good pullback. And now it is just off the 45, 42, 200 period exponential moving average. My suspicion is it is going to try to bounce before it gets to the 45 area. So now, okay. So if you are looking to do it today, to do it Monday, to do it Tuesday, let me look at them all together. So I've got Freeman, F-E-Y-E. Okay, and it's at 49. Let me put it at 49. The next one that you want to look at, Freeman, is SPLK, Splunk, SPLK. SPLK is trading at, whoops, just made the low. A low, I shouldn't say the low. But it too is, oh my, it's gone from 106.15. Unbelievable. Wow. Good eye, 106.15 as a basket. I would actually say, wow, to tell you to nibble right here at each one of them, that's kind of tough to do. A lot of responsibility on my part. So I'm going to take my time, even if I miss a 50 cents or something because they rally from here. The low was 55.55. Yeah, 55.55. I'm seeing so many of these consecutive numbers that repeat, especially in the 50s and 66s. 66, yeah. A lot of them in different stocks. So, yep, a nice, good eye for that. Let me look at my 120-minute bar. I need evidence in the 120-minute bar that it's going to succeed. So that is SPLK trading at 59.73. So SPLK, and we got it at 59. I'll call it 59s. Now we've got the next one is Workday. Oh man, you picked the three favorites that I have. Actually, no, Splunk is not on my list. I don't know if it's just the name or what. I've never really got into this one yet. Okay. Now, this is not reversed as much as the others from off the bottom this morning, but it has gone. Workday made a peak E. Now, it's a little different. On-demand, cloud-based, human financial management. I knew if I abbreviated that word, I'd never figure out. KOTL. Wow. I can't remember what it was, a software vendor. Anyway, it goes from 116.47, wow, 116. You know that some of these have actually had a bear market. This is real bear market material. 116.47 to today's low of 73.30. I have to tell you, 40 points, 73.30. Yes, I'm going to say you've got a good eye. It might not be the low right now, but if you're going to make a basket of them, you could start nibbling, and I'll explain what I'm looking at here. For a bounce. This is just a bounce. Now, I don't think that at this particular point, Workday is working as well as it should. But on a, I would, it might be a quick rally, but I'm going to say Workday for me, the downside move has been so big that I'd be hesitant to overbuy on this one. The rally right now, let me say we've gone to leg, we've gone to leg E in the 2-minute chart, and we've gone to leg B in the 5-minute chart. I'm just trying to do a little work here to see if this exact moment right now, that's a B. So now we should go to C and D in the 5-minute chart. All right, so that's good. Okay, here's my recommendation. I'm not going to choose everything that you've got, but I am going to say FEY. You could do a little nibbling right. You know, it's also not such a great, it's not such a great, now that I'm looking at them again, I was so shocked at how much they pull back. Oh, I know what I'm going to suggest. Freeman, if you're going to be making a basket of these stocks, I think you've got your eye on the prize out of 2 out of 3 of them. I don't know how quickly Workday will actually get going. My suspicion is that as it starts to pick up steam, people will come back in it, but it'll be a quicker pop and drop than the others. So here's my recommendation. I would start a position in Splunk at 59.86, but it's just, even if you're having a basket of them, you're only just starting a position. And to tell you the truth, I don't know where to put a stop in, because the way I would do it is I would increase on strength on Monday or Tuesday, not on weakness. So that's going to be tough. But nibble here at 59.94. As far as, I forgot one. What did I do? I didn't write it down. Workday I didn't write down. So Workday right here. Workday. So now as far as Workday is concerned, no, I'm going to go to the next one in order. That's going to be SPLK is the one I've done. So FEYE. I'm going to say, this is a tougher one. I'm going to say hold off. I'd rather nibble on it it's at 50 exactly. I'd rather see a little more strength. So I'd rather nibble at 52.17, but on Monday or Tuesday, if it pulls back below today's low, that's where I would start a position. That's my preference. And Workday, I'm just going to say I'm not going to do anything just yet. I'm not going to give you any advice on Workday just yet. I will look at it again on Monday. So nibble on Splunk.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire, so now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everybody. We're back. Dow's down 40, S&P's down at $1.83. The selling pressure is there all the time. The VIX is, in fact, at 16.13. I'm going to put this into the category of rally attempt session. Very important, trying to establish a base. Some of the indexes. Look, the IBB, I have a question here. Carlos asked, hello, Basil, question on IBB. Do you feel it is worth taking a small position on the IBB since it hit that 217 area today? That was our downside target. I took a small position on the QQQ versus TQQ, almost at the low. Thanks. If you do not have time now, maybe answer on your radio show. Yep. So, okay, I'm doing that right now. Now, this is what I'm looking at. The IBB is attempting to make some kind of a stand here. I like that. It's the kind of candle that in a leg G, otherwise it's recycling, meaning to go down quite a bit more. It's a G/C. But most importantly, what I'm looking at for the very first time on a Friday in this index is a candle, a long wicked doji candle, almost at the exact middle of its trading band. That says to me that we're setting up a sideways move, even if there's a rally, to come back, even if there's a rally, to come back to the 225 level, 224 level, and most importantly, test this green line here, which is to be the uptrend support line. And it depends when it is. If it's next week, that support line comes in at 190. If it's the week later, it comes in at, 190. That was a mistake. I'm using new software in TradeStation. So that would be 214. Sorry, 214 is the level it's trading now. 224 made a low today of 21696. So what I'm looking at is we're getting real close to support. I'm suspecting that's what's going to happen is that we will at some point go down below the closing price today, which will be the little wick of, which will be the candle body, and retest today's low, break it. And at this point right here, you've got a lot of pressure to say rally, and that rally could be time and price. It could take 2-3 weeks even, and not get very far. Get to the, well, 238 should be very easy, but it could get to the candle of last week, the high of last week, which was 245. That would be a huge move up, 20 points for this stock in this environment, 20, 25 points, maybe 30 points. And then you got to be very, very careful. So that's what I'm looking at. So here's the answer. I am going to try to have patience to see if the scenario I'm looking at is going to pan out. That scenario will have to change if, in fact, there's a rally today and somehow it gets to the 229 area. I don't think it's going to make the 216.96 low by next week, but have a retracement in the daily, which will be a successful H pattern. That's what I'm looking at. So if you want to nibble here, you've got to risk. It's 6 points, 6-7 points. I personally don't want to take that kind of a risk. So the easiest thing to do is to either have patience or to buy a smaller position. And you did say small position. So yes, if you want to just nibble here because you've been on the right side of this many times, I'm going to suggest a little nibble here at 225, knowing that it is a position, a starter position, because you really want to get it somewhere between 220 and 215. That's kind of would be the best scenario. Personally, I'm going to wait. I think I'm going to wait. Let's see what happens. So, so that was the answer to that question. Now, here's something that I needed to spend some time on. VIX.X. That's how I get the volatility index. It is in leg B, in the daily. It very often goes to a C and then fails. So that's not the issue right now. I want the bigger time frame. And what I'd say it is, today being Friday, if at any point, this was yesterday when the VIX was, I think it was in the 15s at the time, the lower 15s. And what I'd say it is, I'm watching this inside track, Chapman Wave inside track, declining a wedge formation. Actually goes there. If I'm going to have a parallel line, that's the parallel line right there. And that's it. And actually, I'm going to raise it up a little bit. Oops, see, I'm just getting used to the new pointer's speed and everything. Okay. So what we're looking at is that if the VIX index closes today anywhere above 16, is that too tight? 16? No, 1608. It's at 1619 right now. That'll be the third time in about 10 weeks that it's been able to do that. That's the first time in the history of this VIX index in recent years where a trend like that has been taken up. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. So basically what I'm saying is that if the VIX index closes anywhere around here in the 1622 area, that'll be the second time it's been a strong close in quite a number of weeks. And it's suggesting that the U patterns are accelerating in speed and time, and it could go higher. I had a question in the den about SCTY, which is Solar City, right? SCTY, which is in fact Solar City Corporation. Now that I'd put into the category as well of the others, the momentum stocks. But momentum stocks at this particular point are going to be just real quick rallies, and then they're going to have testing of the lows, because a lot of people just got trapped and they're going to try to get out on every rally. So in this particular instance, I'm looking at it and I'm saying, okay, weekly charters make that capital A, uppercase A, the straight up, straight down. Solar City had a beautiful on the 334, okay, I had said in 334, it answered someone in the den. I said there's a chance that a short-term top is forming here, but I want to wait a day or two to see if there's a bounce. This is 3314 at 82.75. Well, the all-time high was 88.23. Is that 35 was the 88.35 was the high. So 88.35. And then it did a peak C1, peak C2, and that was the top, and it came all the way back down past that, the Chapman wave little breakout pattern past the 1/3 position in the below the left side lip of 79.86, went to a halfway point, and that says be careful, you could break down, and then you could have a 1-to-1 to the downside in this particular pattern. Let me see how that works out here. 1-to-1 of this particular cup formation, and that takes you to right there, and that takes you to on that level, and that is 51.87. Well, the low so far has been 53.03. So it's real close to the 1-to-1. I'll just make this red so you know exactly what I'm talking about. If you're looking at Tiger TV, this is the daily chart. I just expanded, opening it up there. And you can see the 200-period moving average is right there at 55.11, I believe. It's trading right now at 56.18. Here's my thinking. The pattern that's forming says it's getting ready for a bounce. It's probably going to make an H pattern. H pattern could take it from the 56 area to the 58.16 and then the 60.17, 60.55 area. So I'm going to draw that in, and I'll say, yeah, this is in the category that we're looking at right now. And a lot depends on Monday and Tuesday how any further weakness, if there is, can see it holding the 52 to 51 area. Remember 51, what did I say, 51.17, I think it was, 51.97 is the 1-to-1, about 51. I didn't do it exactly, but somewhere in the 51, upper 51s. That's what you got to be careful of. So that goes into the category, and I'm going to put it in with the category. Now, the next question was, and I love this because when you get questions like this, they come from all over the show, showing people's predilection to look at stocks that probably aren't on your list. So while I'm looking at it, I'm just, oh, there's another question. All right, I'll get that. What is the Chapman wave count? Okay, I'll be right back. So I had Ross Stores completely down, but I got shut down again by just an error. Something happened. I have to redo some of the charts. It's a pity. Other people don't seem to have had that problem. It's occurring with me. I think I have a bug in my charts, and that's a terrible thing because it means I would have to redo all of them on a new system, on a new platform, TradeStation platform. That would be terrible. But doing just chart patterns alone, you don't need the wave count very often. Look, that is in fact the Chapman wave H pattern, and a potentially very negative pattern. Why? Because it's saying that in Ross Stores trading at 69.32, down 54 cents, a break of the low of the week of the 28th of February at 67.41, that's points lower. At some point in the next week or two, we'll say, oh, be careful, you're almost certainly going to retest the 65.15 low, the start of the H pattern, that was started on the week of the 7th of February. What would be a very positive thing? There is no positive thing. All you can see is that this H pattern could become an M pattern. Well, I suppose it is positive because it's not going to break down. So that says you could start another M pattern. You remember, look at this pattern here. See if you can see a similarity. I'm going to go to the gold chart, GLD, and look at that. See that pattern there? It came down, made the H pattern, went to an M pattern, 174.07, and then broke the 148 low and did a 1-to-1 to the downside to 114.68, bounced, retested for another H2 and M pattern. That's the reason why I'm negative on gold. Not very short term. I think it's holding well. I'm talking about in my monthly charts. So that pattern very often just keeps going in a scallop formation to lower lows. Hope that helped you. So another question I saw a little earlier on. Question to my left here at my email. Let me see if it's written out. Okay. What is the Chapman wave count on the 120-minute and daily on the S&P? So that's easy. We'll go to the 120-minute chart right here. Pull it up. Whoops, I'm still getting used to this, huh? So the gold, while I've got it here, the GLD has just made C and a D and an E. It's an E, but hugging that 200-period exponential moving average at 127.10, I think it is. So this is going to be very interesting how gold holds these levels over the coming days because it's in leg C, possibly peak C in the GLD today if there's no new high. So now I'm going to go to the question was S&P, SPX.X. Get the right symbol. And there you are. So here we are on the SPX.X. Went to a peak E. Didn't quite finish that, did I? A peak E on Friday a week ago, plunges to the downside. And the candle that we're looking at right now is a candle that says, I'm going to give you some limited upside downside action. It's on the S&P to the downside is trough A, trough B, trough C, trough D, and this is an E. And it's saying that this is the range that you can expect over the coming, including Monday to Tuesday. This is the range that we're looking at. I'm giving you a little bit of a higher high and a little bit of a lower low. And I suspect that the low that we've seen today at 19.67, I'm going to have to get used to that dark color there, 19.67, you go down to 18.17, maybe 18.15. I got a feeling that somewhere around there we should get some kind of a very strong reversal. So the count is we went to a B minus on that rebound, and now we're in leg E to the downside, lowercase e. Let's go to our first caller. We've got Dan in Baskin Ridge. Hi, Dan. How are you?
Hey, Basil. Doing well.
Good.
I would have been better, but I missed the BIS yesterday morning by a dime.
Oh.
A dime. Oh. But, well.
You know what? There are going to be so many opportunities because the tide has changed. Any counter-trend change, the BIS is 200% short the IBB. Any counter-trend changes will be, they'll start off being kind of short as we saw the other day, a 1 day. Then we're going to go to a 3 to 5, maybe a 7-day rally. And at some point that H pattern will come into a very large arch formation and you're going to get, so you'll have plenty of time. My suspicion is that the IBB, once it wears out the upside welcome in this oversold condition, that you will have an opportunity to get BIS, because the BIS is in leg, and this is a little thing that I'm a little concerned about, just in the waveform, that I don't know if I've missed it or not. This could be a brand new leg B in the daily. It's E/A or G/B. So we've never seen this in the BIS before. This is the first time. So I thought for sure that we were going to have a pullback with the IBB holding quite nicely. But in fact, today went to a lower low. But I would not be surprised based on my daily if, in fact, and the weekly chart even, if in fact we're starting to set up a kind of a trading range that you can see in the BIS, which you could use as a proxy for the IBB, even though it's actually the other way around. This is based on the action of the IBB. But I think it's giving us much clearer signals now. And the monthly, for the very first time, is actually making a leg A that has all the technicals working for it. So you will have another opportunity.
Yeah. Now, I was actually I was calling RBY, but one other question on the IBB. Do you think that could get back? It looked to me like there might be a neckline on the head and shoulders. I don't know if that counts as the right shoulder, but I was thinking see if it might test 243.
You're talking about, okay, the other way around. So this would be a head and shoulders to the upside.
No, if the left shoulder is January 2014.
Oh, are you looking at the daily chart?
Yes, sir.
Oh, okay. So, folks, if you're looking at this IBB, forget all that information all there. Those are all our trades. This is the one that we are still short from 271.20 as a core position. Now, the reason being that my suspicion from the monthly chart is that this is going to be a far more serious. All the bad news, all the good news, every bit of news that came out was perceived as good news up until about a few weeks ago, even up until about 2 weeks ago, even though it was going down. Now, suddenly, who knows where it's going to come from, but now I think it's bad news. So the shoulder you're looking at is the 22nd of January at, let's see, that's a 254.11, pulls back, goes up to the head. That's the left shoulder. Now it goes to the head at 275. That was peak D in my work. Then it comes all the way back, and then you really got two shoulders. One was a very quick shoulder here back on the week of the 19th of March, but you're really looking at the last one, which was at 245.42 on the 2nd of April, and now it's come back down. Now what we'd be looking at is the level of support that you'd be looking at is 212.57, the low of the 17th of December. That would really, for me, that would be the safest neckline. Technically, you've broken what could be called the neckline. That was the low of, you'd be looking at the 6th of January, I think, 222.20, and that's been taken out. I would prefer to give it a little room and say, yeah, that's probably the best one to look at. For me, if it took out 212, that would say that my longer-term target that I'd spoken about a while ago was the 212 to 208 area, and that to me would be a sign that this is in trouble. But actually, as a head and shoulders pattern, one of the reasons why I don't particularly like it as a pattern, that's not to say it doesn't work, it's just that by the time you recognize it, if you look very closely at all the technicals, like the stochastic, like the on-balance volume, like the MACD, we are really close. I've got to change it to 216.96. We are really close to some kind of a bounce in the IBB. So anyone going short, and that means holding the BIS, I think now your risks are also going to be a lot tougher to get the next short. I'm talking about the short that produces really good results in the BIS. That's one of the reasons why I wanted to hold a core position, because it's really difficult on these bounces. When you look back, you say, oh, I could have got him back in there. I could have got, when it's happening. It's like I showed about 2 months ago, I showed a chart which had a lot of colors on it. And I said my problem with charts with a lot of colors is that it can confuse rather than enlighten, because everything seems to have a meaning to it. So I've tried to avoid all that, or I have a chart somewhere else that have all the colors, and there I'm saying, okay, look at this and look at that. I like the clean chart, and the cleanest chart that I'm looking at is the weekly chart. It's got that inverted A, the one that I had drawn ages ago. We're getting real close to a very important trend line. If you look closely, you see the two little doji candles. These are weekly candles. It's almost as if it went on holiday for a week and said, I'll be back to a buy mode. It's a halfway marker. That was the week of the 27th of December and the week of the 3rd of January. Folks, we're looking at the IBB weekly. Two tiny, tiny little candles. It's almost... It looks like they were on the turnpike, and they stopped from Boston to New York, and they stopped at New Haven to go check out IKEA or something. Nothing happened for a week. In fact, it actually looks as if it was a public holiday for 2 weeks. Anyway, that is going to be very important. Those two little dojis, how the IBB rallies above 227 and then holds, let's call it 228, or how it starts to 224, becomes extremely strong resistance if it goes down even lower, and I don't think that's the case. So this A pattern in the weekly is the one that you want to hold on? You had another question?
Yeah, I'd love to.
Okay, hold on. We're on with Dan in Basking-Ridge, New Jersey. We'll be back in a moment.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
I've always great programming here, and don't forget, we're going to go straight into Nico and Paige, all about health, living a primal lifestyle, coming up after this show. So we've got Dan on the line. So, Dan, you wanted to look at?
RBY. I picked it up at 114. And,
you did? Okay.
I did, so, and then I picked up some more this morning at 112. So I wanted to see, do you think 109 will be an okay stop on that?
You know what? At this particular point, I'm going to say 109, yes. And one of the things about RBY, it was acting really well, and it's still acting very nicely. Some of the other gold stocks are just not participating. Royal Gold is acting well, and then GG is acting poorly. So my thinking right now is that when we're looking at let me just write this down if you don't mind here. 1068. Got it. Okay. So when we're looking at RBY and we're looking at the GLD, they both have had C, and GLD's held very nicely in leg C. I'm suspecting that the dollar will pull back a bit more and that the GLD will go higher. So I think that we got the RBY and then we got stopped out for, I think it was a 5-cent loss. I was going to say let's buy it without a stop for now. I just can't do that because the percentage is so big on $1.15 stock or 18 or whatever it was. I don't want to do that. So what I'm going to say to you is I would still be very strict about a stop, and I'd put it in at 109, and I'd put it in probably, it's going to be tough to say to give it a little time to see if 109 holds, but to tell you the truth, if it goes to 109 at this particular point with the low today of 110, right? I would say no. It's not acting well. The gold stars are not acting well as gold is holding quite nicely. So that's what I'm going to say to you. And Sunday night's going to be very important. You might not have a chance to get out if gold pulls back, but I'm going to say that that's a good. I'm going to make one suggestion, and that's just think it through. You're in a little bit of a profit here on some. Maybe you want to lighten up only because the steepness of this peak C is actually a little deeper than I like. That's the only thing. Not to say it shouldn't go to D. So just, or maybe put a stop in at 111 on the day, just so that you're not over the weekend. You don't want to come in Monday morning and have no choice but to get out at 106 because it fell. That's all.
Mm-hmm. Okay, that's great.
Okay.
Basil, I very appreciate your show and all your help.
Thank you very much for calling. Have a great weekend. So,
You
folks,
too.
let's do this just about a wrap-up. BIB was spoken about. I got BIB, Biogen going lower. This is just the start of the biotechs on the downside. Let me just do this, give you absolute what I'm looking at. The volatility index trading at 16.51. It's in the 16s. That, to me, is speaking of the sell mode in the weekly now kicking in. That says to me that there's a good chance that even if there's a bounce next week, in the coming 2 weeks, we're going to see the VIX index push into the 90s and the 20s. If today, especially today, it closes towards the high of the day, and that is above 1628 or 30. It's at 1650 right now. That would be support. If it closes towards the high of the day, towards the 1690s, that's just going to say, be real careful. We could have an overnight on Sunday to Monday morning. We could see some kind of a sharp pullback again. And I'm suspecting Monday to Tuesday, we get some kind of what I call an internal low. Then we have to wait 6 weeks or more for a residual low. That's kind of the way I used to look at it. We haven't seen anything like it for a long time. So be cautious, be safe. If you're in the long position, we happen to have a long position that's up 1.30% right now. Hey, that's nice. But you know what? My long positions, I'm getting more and more to take them off and get the cash or to go to short position. Thanks for being here, folks. Have a wonderful weekend. Don't forget my opening call. Check it out over the weekend. I think you'll enjoy it. Stay tuned for Paige and
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.